Hello traders and welcome to lesson 11 of the ReadFX Beginners Forex Trading course. In this lesson then we're going to look at the 4 types of analysis in Forex trading. So there are 4 main types of analysis: technical, fundamental, sentimental and quantitative. Now traders feel very strongly about their chosen method of analysing the markets, and choosing a method of analysis is a lot like picking a football team. So let's look at each one. Technical analysis then is probably the most common, and it's all to do with chart patterns. So technical analysis involves tools like historical price charts, indicators and lines to help traders make predictions. It doesn't consider why prices move, but instead focuses on patterns and trends in price history. Traders use these patterns to make predictions about where prices might go next. Now if you Google Forex chart patterns, you'll find lots of little PDFs and little drawings like this that list all of the commonly used patterns. So let's have a look at some examples on a chart. Okay, so here we are in TradingView, and I'm just going to show you a couple of examples of some technical analysis. So right away I can see we have a head and shoulders pattern. I can see a support and resistance trade. I can see a trend line. And some traders would even draw a triangle or a wedge or a pennant or a flag. And these are all sort of chart patterns. But in addition to looking at the actual structure, the way that a market moves, traders will also look at individual chart patterns. So for example, this here is a doji and this is a reversal pattern. So when you see this, it's generally an indication that the market is going to reverse. And you can see that the market was going up, printed a doji, and then it dropped down. So this pattern worked. And this is what technical analysis is. It's all about identifying patterns in the market. Fundamental analysis involves studying economic factors and events that can impact a country's currency value. Examples include things like economic data, central bank policies, political stability, and geopolitical events. Fundamental analysis helps traders make decisions about buying or selling currencies based on the big picture of an economy. So let's look at some examples. Okay, so we're looking at the economic calendar, and this is a very popular tool with fundamental traders. Now, this calendar has a lot of scheduled news events which are ranked low, medium and high in terms of their impact on the markets. So a very popular event to trade is the non-farm payroll. Now this is basically just a measure of employment in the United States, and this data is released once a month. And traders love to bet which way the market is going to move once this data is released. And this is a very simple example of fundamental analysis. You have a look at some data and then you make a decision which way the market is going to go based on that data. Next we have sentimental analysis. So sentimental analysis in Forex trading is like gauging the mood of the market participants to understand how they feel about a currency or instrument. Sentimental analysis looks at the collective feelings and attitudes of traders, investors and the market as a whole. So it's similar to fundamental analysis, but it focuses more on the reactions and opinions of traders based on that fundamental analysis. So let's look at some client sentiment data. So this is what's called a client sentiment index. Now this is published by a broker, and we can see down the left we have a list of instruments that you can trade, and then we have some numbers. Now these numbers are very important. This is the number of traders, or rather the percentage of traders that have gone long and short with this broker. So on the Euro US dollar, currently 67% of traders are buying and 33% of traders are selling. Now this is really powerful information when you consider that 80 to 90% of traders lose money. So if you know that most people lose money and you can see which way most traders are going, you can build a strategy around that. So here's an example of client sentiment that's been plotted on a chart. Now we can see that the blue line represents the percentage of traders who are net long, and the red line represents the percentage of traders who are net short. And straight away you can see, if we look at this blue area here, that as people are buying, the market is dropping, which means these buyers are losing money. So it's not a bad idea, if you see a lot of people buying, if the client sentiment is bullish, to do the complete opposite and sell, because remember, most traders lose money. And we can see the same thing in this area here. As clients are selling, the market is rising, which means these people who are selling are losing money. And this is a very clear pattern that you'll see time and time again. Finally, we have quantitative analysis, or quant analysis for short. So quant analysis is data-driven and systematic, and it aims to remove emotion from trading decisions. Traders using quant methods rely on historical data and statistical probabilities to guide their trading strategies. Quant analysis uses maths, statistics, and algorithms to sift through historical data and find hidden insights. So this is an example of a tool used by quant traders. Now what this does is it basically mines some data that you give it in order to find an edge. So I can expand any of these and tick some entry and exit criteria, and it can be based on candles or time or indicators or anything I want. I can even choose just a random 1,000 or a random 500. Once I've done that, the program will start to mine that data, and it will do this at an incredible rate. So for example, if I just press the start button now, you'll see that very quickly it is now doing hundreds of thousands of strategies per second. So it is creating these strategies, and it is then mining this data to find which ones make money and which ones don't. So I'm just going to pause this for a second because it uses a lot of resources. So once the program has finished running, you can see it's found a lot of potential strategies. Now what quant traders will do is run further tests on each strategy to see that they are suitable. So let's take this top one for example. We can now do what's called variance testing. So this is an example of a variance test, and each one of these coloured lines, you can see there are literally hundreds of them, represents a different test that has been run on this particular strategy. In this lesson then, we looked at the 4 types of analysis: technical, fundamental, sentimental and quantitative. In the next lesson then, we're going to look at candlesticks.